Live.
Hey, we are live. We are live. Welcome, everyone. Welcome to another happy half hour broadcast here with um, the Carolina Retirement Planners. I'm David Shakavich, president of Carolina Retirement Planners. In case you don't know, and with me is my daughter and partner in the business, Sam Shakavich.
Hello.
And as usual, behind the scenes is our director of client fun, Amy.
Hi. Oh,
Hey,
and
Amy.
turn up barking in the back, Oh, there she goes. Okay. Bye.
And Amy knows all kinds of things. Like one of the things she knows is how many of these we have held now. It's been almost 2 years.
Yes, this is number 100.
100.
Ooh, 100.
So we started this, for those who don't recall, when COVID came. We couldn't all get together like we normally do in little dinners and lunches and and so we said, let's all have a get together on Thursday at 4:30. Grab your favorite drink, and we're gonna kind of visit and usually try to teach you something. And today we got an interesting subject. How your Social Security is taxed, and a lot of background with it. That's actually, I found a lot. The more I dug, the more fascinating facts I found about Social Security. So we'll go into some of them. But for most of you, if you collect Social Security, they actually include some of it in your taxable income, and how and why they do it and where the money goes is fascinating. And we're going to do that first. But we always like to start more with a little more fun, since and one of the things is, what day is this? We always have a national day of some sort.
Yes, today is National Bomb Pop Day. Bomb Pop.
Bomb pop.
Yeah, like the popsicle. Like when you
Yeah,
get,
they look like a red, white, and blue rocket.
Yeah, you get them from like the ice cream truck. I think we get them at stores now, but nostalgia. You chase it down the ice cream man, you'd be like, yeah, I want that, kind of thing.
Okay, so everybody, when tonight, you can run out and get some flavored ice to celebrate.
I have fond memories of chasing down the ice cream truck and getting a bomb pop.
Right? It was like summer. It was like the epitome of summer, the ice cream. Yeah, it was just great.
Yeah, we're always playing that same old tune, over and over and over.
You hear it and you're like, oh, where's my money? I gotta get it.
Think of the poor truck driver, the person running that. It's like, oh,
Dad, do you have any change? Dad, where's your wallet?
Exactly. Oh, all right. So let me just ask, what are your favorite ice creams? Well, from the ice cream truck. From the ice cream truck.
If I was a fan of the bomb pop, for sure. If that's like what I was in the mood for, I would go for those. I liked, and like the things that had like vanilla and chocolate, like the nut. What are the ones that like
Nutty
the
butters
with the chocolate on top?
Nutty butters or Nutty Buddies?
Nutty Buddies.
Yeah, and they have like the nuts on them. Yeah, those are good.
I like those a lot.
And there's creamsicles.
Yeah, the creamsicles. I like the creamsicles too.
I like the orange push-ups. Those were great.
Do those trucks still come around now? I don't know. They don't really hit my neighborhood. I'm in the hysterical district, but if you're out in suburbia, do they still travel and come around?
Yeah, okay. I think so. Well, I'm in my community that I live in is actually probably predominantly retirees. So I have not heard the ice cream truck come by, but I know that they still do come by other places.
We heard it a few weeks ago, but it did not like venture into our neighborhood. And it was actually when my grandson was here. We were waiting outside. We're like, please come on. But disappointing. It didn't turn down our street. So, oh well.
I guess. Well, that's what today is. Appropriate time. Last day of May, I guess, or June rather, I guess. So, and we have a number of visitors. We always like to say hi. I see Brad has joined us. Teresa, a constant hit, is here. Bruce, it's good to say you is here saying hi. Al is here. Dan and Barb are in the real bear country. He is literally up in the mountains, adjacent, as I recall, to Federal Park National. It just I I know he's seen bears. He's got the stuffed bear at his place. Um, uh,
Oh yeah, I sent pretty sure that he had Flat David wrestling with a bear recently.
yeah.
No joke, like no joke, for real.
Yeah, I just got the pleasure of seeing that picture
Yeah,
right before we
yeah.
logged on.
I know, I was laughing pretty hard. I loved it.
Jameson is voting for the creamsicle. Uh, and Teresa tells us they do hit their neighborhood. So it's pretty cool. Pretty cool. And Jay has joined us. Anyway, and Phil, good to see you all coming. Anything, maybe
And
should
Michelle
we get,
too. Hi, Michelle.
yeah, should we plunge in and start learning some of this yet? Or should,
Well, I am waiting with bated breath to hear what you have dug up on the thrilling world of Social Security taxation.
Really thrilling. That's okay.
oh,
I'm
no, give
yes,
it a
yes, I'm
chance.
waiting to be thrilled.
Okay, well, we'll see what we can do here. So it's Social Security taxation. Now, if you think about it, when you go and look at your tax return, there is a certain amount of income that's put in there to be taxed. And that income usually comes from two things. One of the things it comes from is, well, it's just plain things like if you're working, it could be wages, it could be IRA withdrawals, it could be interest from all the interest your money markets now pay, or capital gains, all the things that come from money you've made in or been given or invested in one fashion or the other. But another one that's sitting there is your Social Security. And the thing is, not all your Social Security is, this comes over here like this, but some of this is added on top. And how much is added on top depends on another factor, but your Social Security is usually brought over in three amounts. One is, it could be zero. In other words, they don't count any of your Social Security. It could be 50%, or it could be 85%. That how much comes over depends on a thing called combined income. Now, combined income is an interesting thing. It's calculated, but you can't find it on your tax return. If you look at your tax return, you do not see any line or anything for combined income. And combined income is calculated by taking your adjusted gross income. Those are all the things like wages and IRA withdrawals, all the other normal things you think about that's taxed. Plus, a couple of things you don't think of as tax. If you've got a Roth IRA and money comes out of it, that's put into your combined income, and so is interest from municipal bonds, which normally isn't taxed. So they don't tax that money. They just use it to determine if your Social Security is taxed. Then they take half of your Social Security benefits and they add that up, and that's your combined income. And depending how high that is, depends on how much of the Social Security they now bring over and tax at the normal tax rate bracket you're in. It's just kind of interesting because it's a secret number. Nobody, you don't, you have to go through some effort to find it. Now, what determines if it's taxed depends whether you're single or whether you're married. If you're single and that combined income is less than 25,000, so let's say you were making 10,000 in Social Security and you made another 15,000 in a pension, you would pay no tax on your Social Security. If you went above that, if you made 16,000 on Social Security, they start taxing that extra 1,000 starts affecting the taxability of your income, and it can be up to 50%. And if you're above 34,000, it can get up to 85%. Nobody pays tax on more than 85% of their Social Security. If you're married, it's a little higher. It's 32,000 and 44,000 as these numbers. And you usually see it. I found a nice little graph showing it, but usually you read it something like this. If you are single between 25 and 34, you may have to pay income on tax up to 50%, and 34 up is 85, and for married, it's 32 and 34. So I got to thinking, engineers, we like graphs, we like to see pictures. And I found a couple websites where you can feed your Social Security in, whether you're married or single, and your other income and your adjusted gross income, and it'll show you how much of your Social Security is taxable. So what I did is I went in and I ran the numbers and was able to plot it in Excel on a graph. And so I used a married couple, and I said they were bringing in 40,000 a year of Social Security. Maybe they each had 20,000 from their working life. And then I said, if I add money on top of that, now remember, they're including 20,000 automatically. So you could think of, instead of 0, this is really 20,000. But if I added 12 to it, if I made 12,000, say, from a pension, up to that 12, I didn't pay any tax on my Social Security. But once I cross 12, it starts increasing. It doesn't actually jump. It's kind of like if you add $1,000 more above that 12,000 limit, 500 of it, it says $500 of your Social Security is taxed. I don't know where they came up with this math, but it's almost a straight line. I don't know why it hasn't been, but you can see when you get to 12,000, it starts to be taxed. When, as a married couple, you bring in 40,470, all of a sudden they're going to start taxing they're going to start taxing 50%, adding $20,000 of your Social Security into the taxable pot. When you get to 56,942, we get up to this 85% number. Just sort of interesting. So when you get above that magic number, it starts going up. And I never really understood. I never really had seen this anywhere else. But there is a continuous increase. And then when you get above 56,000, it just levels off at 85% of your Social Security being added in. But there's a lot more interesting stuff behind this that isn't so obvious. But this is the how your combined income affects how much they add of your Social Security. Now, this is one thing I never realized. Remember, we have two limits here. We have the 50% limit, and we have everything from 50 to 85. So from from 0 to 50%, the money, if you're below that limit and half your Social Security gets added in and you pay tax on it, where does that tax go? I always figured it just was taxed like all my other taxes. I figured it went into there. We're going to see in a minute where it originated from, but that money actually goes into the Social Security Trust Fund. They actually put that in for Social Security. So they're using your Social Security to pay for more Social Security benefits. It doesn't go into the general fund, it goes into the Social Security Fund. From the amount from 50% to 85% that's added to the pot, that goes to basically the Medicaid pot, to the hospital insurance pot. So that's going into that's going into the Medicare, not the Medicaid, my mistake. Medicare, the hospital insurance pot. As we'll see in a minute, this part of the law occurred in 83, and I think this was 93. And so we can look at some of that. Just sort of, I always thought it was taxed like everything else, but it's actually being used to kind of keep us all whole in our old age.
Wow.
Now, this was actually done in 83, signed by Ronald Reagan. And this was done, I think, in 93 anyway, this was done in 93. Here's the thing that they don't tell you, and this is a tricky thing they did. We have these limits. Remember, the limit for married folks was 32,000 and above, and this combined income starts to get taxed. That is the limit they set in 1983. And they never changed it. It's been that same limit. Back in 1983, it's hard to find the exact number, but it seems like back then only about 6% of the people were taxed. Less than 10% had their Social Security entered into being taxed. Now it's over 50%. And here's why. If I say 32,000 in 1983, and I plug it into this little calculator I got from the Bureau of Labor Statistics, can't get better than that, right? If I put it in there and they ran it through the consumer price index, the inflation index calculator, that's equivalent to 95,000 today.
Wow.
So you can kind of see that if 95,000 was the limit on whether your Social Security's taxed, you'd probably be back to less than 10% of the people, getting their having their Social Security added.
Mm-hmm.
Even if you had 40,000 in income, you'd have to be at like 75,000 in other income plus the 20,000 from the Social Security before you'd cross that level and get taxed. So they'd probably have most of them. But now, because they haven't changed the limit, where at one time only the really rich had to pay tax, now the only people that don't have to pay tax are the really poor, or pay extra tax. So kind of a sneaky thing. By not indexing it to inflation, they automatically increase taxes without increasing taxes,
Yeah.
Found that to be a sneaky little thing there. A couple other things, we got a little bit of time, a couple other interesting things about Social Security. This, of course, is Mr. Roosevelt signing the Social Security bill on August 14th, 1935. I don't know if you recognize anybody else in that. This guy looks like something from the Andy Griffith Show, but that was a very famous.
He does. He really does.
He does. It was like Floyd or somebody, right?
Yes, he does. Yeah, that's good.
Who knew that Floyd was,
I don't know. You just blew my mind there.
yeah. So Social Security they came out with, you would apply and they would assign you a number. And this is Grace D. Owen. Uh, she wasn't the first person to get a number, but she actually got the number 001-01-0001. It was in New Hampshire. And what they wanted to do, what the Social Security wanted to do, was to give that number to John Winant, to give that number to John Winant, who was the Social Security Board chairman. He was also the governor of New Hampshire. They said, hey, look, we've got you the number one. And he refused it. And then they had another person they tried to go, and he said, no, I don't want that. So they just took the first person in that area to apply, and it was Grace Owen, and she got the number of 001-01-0001. Apparently what zip code you're in makes a difference as to what they can do. And this was the area that had a zip code where they could get all ones.
That's interesting.
Now,
I wondered why they didn't want it. That's kind of a funny little fact.
I don't know. When they started it back then in 1935 or whatever, the for the first 3 years, they didn't give you an income. They gave you a cash payout based upon how much you put in. And this is the first person to get money out of Social Security. It's Mr. Ernest Ackerman, and he retired in Cleveland as a motorman. I guess that was probably running one of the buses or the trolleys. And he actually made one payment. They actually paid 5 cents into Social Security for him. And the next month he retired, and he received a lump sum of 17 cents. So pretty cool. He more than Social Security. But I just never knew there was a time you got a lump sum, and before they got it rolling, that's what they did. Mm-hmm. So some more little Social Security trivia. And one last one here. This is 1983, and this was known as the Greenspan the Greenspan consortium or policy. This is Alan Greenspan here. Most of you know him. He went on, played a big role in the Fed in years to come, and did a lot of important things. But he was in charge of the group that figured out in 1993 that they could start taxing Social Security. They did some other things.
This guy's to blame.
You recognize this is the other one I recognized. You remember, who that?
No, who is he?
That was Bob Dole.
Oh.
I don't know if he's still alive.
Wow.
He was Bob Dole, but he became a little. So this is the group that were responsible. They also figured out how to. They actually instituted the 8% increase in Social Security benefits if you wait. Now, it didn't take place. They decided it there for a certain group that didn't kick into the 90s. But, and I also didn't realize it, from your full retirement age to 70 is when the 8% kicks in. At 62 to 63, you don't get 8%. You get 6 point something. It phases in. So they did a lot of things. And actually, I got to take my hat off. They did a lot of things to keep Social Security going, because back then it was going to run out even sooner, because we kept adding stuff to it, and more and more people could benefit from it, and so they figured out something that would work, that would keep it here, even if they were using Social Security to pay the Social Security. So a little bit on Social Security. Next week, we're gonna do something similar, and it's on Medicare. And if you're 65 and start collecting Medicare, they charge you. They take money out of your Social Security or charge you so much a month to get the benefits. And how much you pay determines on your income again by some weird stuff. And we're going to kind of go over that and things you can do about it. In terms of the Social Security, and if you say, how can I not pay tax on my Social Security? About the only strategy that could possibly work is if you are not getting a pension, if all you have is IRAs, and you convert all your IRAs to Roths, then the money you're taking out of your Roth IRAs to live on, well, actually, that's for Medicare. That's the part that it does it there. So, well, actually,
Yeah, that's
anyway,
one of the strategies to get you in the
so
0% tax bracket.
so we will, anyway, so we're going to talk about that next week. I don't know if it's real fascinating, but so much of the other things, market performance and all, are so weird and depressing now. I thought I'd find something interesting to know. But anyway, that's this here. So, okay.
Cool. Well, that was fascinating, Dad. I will say you somehow found a way to make Social Security taxation
Yeah,
interesting.
you did. I'm
Congratulations.
impressed. I don't know how you do it, but you did.
You did. So nice job, Dad. All right. Is it time?
It's time. Drum roll.
All right. So it's time for our weekly wine drawing. We raffle off 2 bottles of wine shipped directly to your door from Fermental Bottle Shop. And to get your name into my jar here, all you have to do is, if you are on Facebook, you just each week we'll have like a little event that comes up, and you just click that you are going to the event. If you are on our email list, we'll shoot you out an email each week that lets you know what our upcoming topic is. And if you respond to that email, you will also get your name here in the jar. And if you share either of those things with a friend, you'll get an additional entry into the jar. So there's 4 different ways to get in here, and they will maximize your ability to get bottles of wine from us. So this week's winner of 2 bottles of wine is and they are here. I know they're here. And I'm glad that they won after sending us that incredible picture of Dave fighting the bear.
Oh,
Flat
yay.
Dave fighting the bear. Our winner this week is Barb and Dan B. So, and they entered a bunch of times. They entered like pretty much every way you could enter this week.
They did. They invited friends. They sent in they did everything. They RSVP'd on Facebook. They sent all the emails. They did all the things this week.
Yeah, they had a bunch.
Vote early, vote often, right?
Yeah.
Yes. Entering as many ways as you can definitely pays off. So
Amy knows that one.
congratulations.
That's a Chicago saying, if I recall, you know.
Don't go there. Yeah, that's kind of funny. Yeah, I like it. That made me laugh. Oh, that's good. I'm not drinking anything today because I'm gonna have to go somewhere after this. But I have my
I have a LaCroix.
I have water too. Ding ding. Yeah.
Iced tea.
Yeah.
I hope you're all drinking better stuff than us right now.
I know. We're really boring today in our beverages. Fun in the presentation, boring in beverages, but that's okay. So yeah. So I can't wait next week. Find out the whole new. I was like, you made this interesting. I can't wait to see how you're gonna make that.
The thrilling world of Medicare taxation.
Dun, dun, dun. I know. I'm impressed.
Well, you get into names like Irma, you know, and how Irma is calculated, and anyway, it's sort of, and it interfaces with, if you do Roth conversions, how it affects that, how they affect that too, and a whole bunch. And Irma is based on like 2 years before it goes on, and all. It's a hoot.
So I guess that's not going to be the name of my firstborn daughter, huh?
No,
Probably not. Probably not.
Probably not. All right, back to the drawing board.
Yeah. No. No.
Well,
So
thank you everybody for tuning in to
thank
Happy Half
you.
Hour. Congratulations, Barb and Dan. And
Cheers.
for everybody else, please join us next week and cheers.
Cheers, everyone.
Have,
Oh, wait a
have a
second.
wonderful
Happy
4th of July.
Yes, happy
Yes,
4th
a
of
wonderful
July.
fourth.
Yes, cheers, everyone. Take care. Bye-bye.